100% win rate strategy. Is that even possible? Well, in this video, I'm going to explain you in details how I had 100% win rate and some tips and tricks to increase your win rate in your trading strategies. And if you want to double check all the trades, you can see my buy alerts either here in YouTube or in my Discord server in Swing Buy Alerts or in Flipper Fund. Type in trades and the bot will answer you all the stocks that we took profit. As you can see here, there's 23 stocks over the last month that we closed in profit. I want to share with you guys 4 important rules that are extremely important to succeed with this strategy. The first thing is that you should not trade penny stocks. I only trade safe companies with minimum 10 billion market cap. Even in my swing trading scanners, my minimum filter is 10 billion. My second rule is that I never risked more than 1% of my trading account. And the best way to manage your risk is using calculations. So I've made a bot that does the calculation for you. You simply type in risk, the amount you want to risk in. For example, I have a $50,000 account. 1% is $500. So I type in 500. Let's say we're going to buy Apple, which is currently at 140, and stop loss is at 130. We click enter and the bot will answer me how many shares to get in to risk maximum $500. He said that I get in with 50 shares, so my maximum loss on that trade is $500. And if you want a more advanced way to manage your risk, you can use the Flipper Font channel and check what positions that I'm in. For example, let's check FDX. I want to manage my risk on FDX. I type in manage risk, the stock name which is FDX, and your account value, and the bot will do the calculations for you and will say to get in maximum, for example, 16 shares to risk maximum $500 on that trade. My third rule is that I never buy a stock when it's green. I only buy stocks when are extremely oversold and in deep red. Here's a few examples on exactly what I mean. An example on Visa V, you can see here it's extremely oversold. Let's switch to another time frame so that you see when I bought. Okay, so you see V is dropping here, and I bought when it was extremely red, which is at the lowest point. So whenever a great company, a good company, it's dropping, it's in red and it's around a great support level, I directly buy. I don't wait for a bounce back because if I get in after the bounce back, I already missed the main move. As you can see here, V, if I bought after the bounce back, I would miss the original move. So I bought in deep red and I made around 4% on this trade. Here's another example on BYND. So I bought the stock when it was in deep red. I did not wait for a bounce back. It's at a good support level. At it dropped, I directly buy. If I waited for the bounce back, so if I bought in green, I would miss 10-20% of profits, which is a really big deal in swing trading because that's our profit margin. As you can see, I took profits whenever it did a 30% move around 144, and after a few days it did a 100% move after a news came out with Pepsi. Here's a last example on 3M company. I bought when it was at a great support level and in red, of course. I did not wait for a bounce back and it reached target after 1 week. So now you exactly understand why I buy in red and I don't wait for a bounce back. And the last thing, of course, it's a good risk management. But this risk management, it's kind of different. Usually my stocks follow S&P 500. So I use S&P 500 to either increase my positions or decrease. As you can see here, S&P 500 is moving in a channel, and whenever it drops to the low of the channel, I start increasing my positions. And whenever S&P reached the top of the channel, I start taking more profits and decrease my positions. Same idea continues. Whenever it's low on the channel, I increase my positions, and whenever it's at top, I increase my positions. So with this position sizing, I'm increasing my probability to win more when S&P is going up and lose less when S&P is going down. So like this, your win rate will stay the same, but your risk reward ratio will definitely increase. Now let's get into the interesting part, the strategy. We know that S&P 500, which is the general market, over the long term, it always go up. So does the large cap stocks, which we trade on. So you need to understand something from this. We only trade stocks that are on an uptrend. So let me explain you on charts how this exactly works. If a stock is on an uptrend, it means over the long term it always go up. But we know that the stocks doesn't go in a straight line up. It goes up in waves. And from these waves you can see the stock is moving between two lines, which is the support and resistance, which I call a channel. So the stock is moving between this channel. And our job here is to buy low, sell high. As simple as that. These two blue lines, it represents the support and resistance levels. And since trading is a game of probability, I use many other trading indicators to increase my win rate in my trading strategies. Like I use 200 moving average, 9 exponential moving average, MACD, Stochastic Rsi, and many more. I'm going to show you where and how to use each trading indicator. For example, I use 200 moving average to check the general trend of a stock. I use 9 exponential moving average to write short term of stocks. Let me give you an example how. If I bought low and if I want to sell, I can write the short term trend on 9 exponential moving average and sell whenever 9 exponential moving average and the price cross together, which is right around there. But we have another scenario. If the stock price just crossed the resistance level, instead of selling early, we can write a short-term trend using 9 exponential moving average, and we simply sell whenever they cross. Now, when I use the MACD indicator, the MACD indicator I use for detecting momentum changes in the stock. I highly recommend to watch my MACD trading indicator video because that will explain almost everything on MACD. Now let's explain the Stochastic RSI. The Stochastic RSI is the best indicator to use when a stock is moving in a channel. When the price is at the low of the channel, the Stochastic RSI will show an oversold state, and when it's at the high, it will show at an overbought state. So that's why it's the best indicator to use when a stock is moving in a channel. So now I'm going to explain you exactly on real stocks, on real trades that I did, on exactly what I mean. Let's take an example on INFO. I said to buy INFO at this dip. Let's analyze why I said to buy at this dip. The first thing, it was in deep red right around here. Okay, and we had multiple confirmations on the marker indicator was pretty oversold. The marker is close to RSI, but I found it better. And MACD started to lose momentum to the downward side, and Stochastic RSI, it was again oversold. As we explained, Stochastic RSI is the best indicator to use when a stock is moving in a channel. You can see here how the stock is moving in this channel. So with multiple confirmations, I have a higher probability that this trade will work. So I bought in at this dip, and it did around 8% move, and we took profits. Here's another example on COST that we bought. So let's analyze COST. COST was moving in this channel, and I found the stock when it was around here, when it was in red. Okay, I found that it's around a good support level, and the stock is on a clear uptrend because 200 moving average, the slope is positive. When the stock is between a channel, Stochastic Rsi is the best indicator to use. So I bought around this area, I had multiple confirmation, the marker indicator was oversold, and I bought. After I bought, the stock did reach target, it made 6% move, and I took profits. After that, it continued to drop, but I don't care because it started to lose momentum here, and whenever I make my profit, like the first swing up, I just take profit. This is what gave me a really high win rate in my strategies. Here's another example on 3M company. It's the same pattern, the same thing. I don't need to repeat the same thing. This is the strategy. It's moving in a channel, multiple confirmations. Around the support, I buy. Where do I sell? Around the mid and high of the channel, and it clearly reached target. Based on the backtest of the strategy, I have around 80% win rate on the safe companies and 5-to-1 risk reward ratio. To increase this win rate, I used my own technical analysis and fundamental analysis. So now let me show you an alert on Twitter. Twitter was moving in a channel, it's on a clear uptrend, but it was not at the low of the channel. I saw that it was oversold based on the indicators, but I did not buy because it was not at the low of the channel. I waited very patiently to reach my entry. If not, I would not buy. If I bought this high, I would lose around 10% and maybe cut losses. But instead, I waited patiently, and this is the results. As you can see, the patience paid off in this strategy. If I bought right here after this push, I would get out break even if I held the position. But instead, I waited patiently to reach this low of the channel, which I'll have a great buying opportunity, and I bought and I ride it the way up, which we made around 10%. So patience is key in this strategy. If you don't have a great setup, simply don't buy. I only buy at great setups. It's the same thing with Facebook. I waited Facebook to reach the low of the channel. I did not buy. I waited very patiently. I waited very patiently to reach this low of the channel. We bought, and you see the result. It pushed, it made 10%, and we took profits. And now I'm going to show you another example on MSFT. I waited for it to drop, but it did not. It respected the support levels. It simply made this triangle and broke out. So in this trade, I did not lose anything, and even I did not win anything because I did not took the trade because it was not in my trading setup. So I did not miss anything. I'm pretty sure that I'll have better opportunities after 1 day, 2 day, or even 3 day. I don't really care the stock. I just want a perfect setup with a good company. If that's within my strategy, I buy. If not, I don't. But of course, with this extremely high win rate, I don't have extremely high reward because the stocks, they are not very volatile. Simple small moves, but over the long term, you'll definitely be a winner. And if you have a small account and you want to leverage on this trades, you can simply buy a call option and you leverage. Now you're going to ask, it is possible to maintain this 100% win rate? The answer is definitely no. Because this last 2 months, SPY was on an uptrend. So with this amazing uptrend, I had 100% win rate. But of course, SPY is not going to stay in this uptrend. It will make pullbacks on the way. On the pullbacks, as I explained previously, I'm decreasing my positions, and on the dips, I'm adding more. So as you can see, if the market is on uptrend, you'll have an amazing win rate with this strategy. But if it's on a downtrend, my risk reward ratio will definitely decrease and my win rate will stay around 70 to 60%. But on uptrend, you'll have an amazing win rate. If you want to double check all the trades that we took and the buy alert, you can simply go to my chat room, type in trades, The bot will answer you all the stocks that we took profit, and here you can see all my buy alerts. So thanks for watching and see you in the next video.